Hello everyone, welcome to Just Invest Today. And today we're going to be talking about momentum investing versus value investing and basically telling you the benefits and disadvantages of both and then you coming to the conclusion on what you want to do. But as you know, in Just Invest Today, you know I'm a value investor. I follow the teachings of Warren Buffett and Phil Town. But in today's video, I'm gonna make you make your decision on what you want to do. So guys, if you like this video, can you like it and subscribe to the channel? Happy New Year. I'm gonna be providing a lot of good future content. So momentum investing. Momentum investing is all about finding the strength and price trends using technical indicators to determine this, looking at existing market trends. And when you're doing this, you're trying to find out when to buy and to sell stocks. So momentum investing is all about finding the best stock to get in at the right time. So a lot of momentum investing is a lot about timing and how you're going to get in and how you're going to get out. Because remember, there's a lot of sectors that are very trendy, and that's what's going to get you those fast, quick gains when you know there's some good news on a stock or good news on some company, and you're going to see that price trend up and up. So you want to get in the right time, and then you want to exit at the right time when kind of the news is just like stable, or maybe some bad news will be in the future. So that's what momentum investing is all about. So when it comes to momentum investing, you have to understand there's going to be a lot of volatility in the market and in the stock, and you're basically at the hands of the market because you know the market, we cannot determine where it goes. Sometimes, some days it can be bad, sometimes it can be good. It can be good for 5 days straight, it can be bad for 5 days straight. So basically, when you're doing momentum investing, you're in the hands of the market in the short term, and you're in the hands of the institutional investors. So basically, the institutional investors make up majority of the market. We have to realize that, like the retail investors, us, we barely scratch the surface of what buying and selling in the market. It's all about the big boys. So we're in the hands of them if you're doing momentum investing. So you have to realize that. So they have people, they have bosses to report to. So they're all about the short-term money. They're all about the short-term gain because they need to be. Because if they start losing a lot of money, they start having negative years, the bosses are gonna fire them and they're gonna find a new manager. So they have to make money in the short term to impress new customers. So we have to realize that when you're doing momentum investing. So institutional investors really focus on good news in the company. They love the good news in the company. The good news is what's going to drive the stock going up. So they see price trends, they see that price trends going up, and then when there's a lot of good news surrounding that company, that's when they're getting into those stocks, which makes sense because it's going to drive the price way, way up. But then you have to realize when that bad news comes, the opposite coin of this, and then the bad news comes, something happens in the stock, the EPS goes lower, or there's something happening in the company, they're the first ones to sell. And when they sell, everything's going to decrease, and then people are just going to follow that trend and keep selling, selling, selling. So you have to understand that you're in the hands of these institutional investors and in the hands of the market because you cannot predict what they're going to do, and you're not going to predict what the market's going to do. So now that we understand that, let's get into 3 benefits of this. What's the benefits of momentum investing? The first benefit from momentum investing is there's a high chance of you making profit really quickly. So when you think about that, you can just get into a stock that's trading at 50, and that stock can be just trading at like 60 in like 2, 3, 4 days. Just because there's so much good news, there's so much positive about that stock. And you can really take advantage of that, and you can just buy in. But that's the thing, you got to be able to buy in and then sell at the right times, and that's what momentum is about. So if you think you can do that type of stuff, like you feel like you have that thrill and you're able to actually buy in and then sell at the right times, then I guess momentum investing can be for you. The second benefit, it's so easy to kind of to catch up on market trends. If you're reading a lot of newspapers, if you're honestly looking at the market, it's so easy to find out what's the market trend and kind of capitalize on that. You can look at what's the new nice IPO coming out, what's the new type of EV coming out, and it's very easy to capitalize on that. So that's why people love momentum investing, because they see where the money is going. They see what institutional investors are doing, and they can capitalize on those short-term gains. And they can be high profit gains too. You can get like 50% in a matter of like what 5-7 days, and just get those huge gains on your money very easily, because you understand the volatility and you understand what you're doing in the market when it's that short-term fear or that honestly good news coming into the market. So that's one of another good solid advantages of momentum investing. And the last benefit, this actually benefits both value investing and momentum investing. It's easy to take advantage of people's emotional decisions. So when it comes to momentum investing, it's a very emotional game. If people find out there's good news, oh, they're so excited, the stock's gonna go up, people are buying in so fast. And if there's bad news, everyone's depressed. People are selling their stocks so quickly. And when it comes to those two things, you can very well take advantage of that if you're a momentum investor or a value investor, and that's what people do. So that's another easy benefit when it comes to momentum investing. You can take advantage of those emotional distress and just get in at the right time, and then get out when people again get excited about the company, get some good news behind the company, and the stock goes right back up. So the first disadvantage of momentum investing is actually there's a lot of high turnover in your investments. So you're just trading in and out of stocks rapidly, like at a rapid pace. And I guess depending on what broker you're with, this can be very like hurtful for your overall returns, because there's going to be fees associated with that. But a lot of brokers are actually better with that. They don't charge too much fees, or they don't charge at all. But even then, it still comes to taxes. Taxes are going to kill you, and when you're known as a stock trader, it's going to be worse for you. So if you make too many trades in a year, it hurts your taxes. So because you have to get that capital gains. So when it comes to that, you have to understand that like momentum investing has a lot of stock turnover, and there's a lot of in and out, and sometimes you can't capture that gain, sometimes you capture losses, and then you're all over the place when it comes to that. So be aware that. The second disadvantage, it's so intensive. You have to like do a lot of market research. So when it comes to that, sometimes you got to keep up with the market hourly and like monthly. Like you got to keep up with the market, like very conscious of it. You got to keep up with it. Like there's no kind of times off. So because you got to be, remember, you got to be focused on good news, and you got to be focused on some bad news. So be aware that like if you're going to be trading, momentum trading, you got to be kind of invested, and you got to know a lot of stocks. You got to know a lot of stocks, a lot of areas where you want to invest in and take advantage of this momentum. So be prepared for that. You're going to have to be investing a lot of time and a lot of minutes and a lot of hours into this if you want to be a momentum investor. So that's the second disadvantage. The third disadvantage when it comes to momentum investing is basically the market sensitivity. There's going to be so many times where you're just going to get hit with some bad news, and boom, your stock drops. It kills you. And the market is going to be so super sensitive to that. And your just stock is going to fall out of nowhere and fall down. But it can be the opposite way too. It can actually be good. There can be some good news that just kills it and bumps it up. So you got to be aware of that market sensitivity. And when it comes to market sensitivity, you're going to do the best in bull markets. Bull markets are going to actually help you when it comes to momentum investing, because there's usually a good uptrend of the stocks that you're going to be buying. So it's going to be very market sensitive, because in a bear market, you're probably not going to do as well. You're probably not going to make those same gains that you would in a bull market. So you got to be aware of that when it comes to momentum investing. So value investing is what I do on my channel, and that's what I focus on. So guys, if you want to know a lot about value investing, just stay on this channel, look through my videos, and you can get a lot of hidden gems on investing, because Warren Buffett is the godfather. But basically, value investing is all about finding undervalued companies, companies that have a strong intrinsic value. And when we find these companies that with strong intrinsic values, and the way that we find that is we take all the cash flows of the company, all the future cash flows of the company, and then we discount it back to today to get the value of that company. And when we get that value of the company, the only reason why we actually look on the market, the only thing we care about on the market is the price when it's giving us a good price to buy. We don't worry about the market. We don't care what it does. In the long run, the market is going to benefit our company if it's a strong company. Because we know that the market is short-term thinker. In the short term, it does what it does. It goes all over the place. It doesn't care. It can be good news, bad news, sideways news. It could be news about something happening in Africa. The market is gonna be affected by that. But in the long term, it's gonna help the company. The company is gonna rise up because the market has to follow the economics of the company eventually. It'll catch up eventually. So that's what value investing is about. So my biggest benefit and why I love value investing is because you only need to find a few good companies, 3, 4, 5 good companies, and you can just invest in it and just leave it. You don't have to think about it. And that's what I love, because you don't have to be going crazy in the market trying to find this company, trying to find that company, trying to time it, trying to sell it at the proper time. You can just find 3 good, 4 good companies, put your money in it, and just let it rest. Let it sit for 4 or 5 years if it's a strong, durable company. And that's what I love about this strategy. But then the biggest downfall is a lot of people are not able to be patient. Sometimes you might have to go without gains, or maybe you don't make an investment for a year just because you're sitting on a price that you want to pay and the market is not giving you that price. So that's the biggest downfall I can probably see, is that people are not going to be patient and just wait, because a lot of times some of these prices that you want to pay for don't come. So there's a bull market, and then you're missing out on all these gains because you're trying to wait patiently for the right price, because you want some kind of short-term problem to happen with that company, or you want the market to fall down. So that's what I see is one of the biggest negatives that can come with that. You can probably miss out on potential gains in the market while there's a bull market going on. So what do you guys think about this video? If you liked it, can you please like and subscribe? And I'll get back to you in the next video. Peace.